Hey, good morning. We got CPI. Grab your coffee while you can. About 15 minutes to that huge CPI. ECB's Nagel. Interest rates are at a very good level. The US CPI is ahead. What are the technicals telling investors ahead of the main event?
Gold steadies near $3,350 as traders await U.S. inflation data. OPEC leaves forecast for global oil demand growth in 2025 unchanged at 1.29 MBD.
Brazil IPCA inflation registered at 0.26%, below expectations, 0.37% in July.
Pi Network price forecast.
ECB's Nagel. Interest rates are at a very good level. The US CPI is ahead. What are the technicals telling investors ahead of the main event?
Gold steadies near $3,350 as traders await U.S. inflation data. OPEC leaves forecast for global oil demand growth in 2025 unchanged at 1.29 MBD.
Brazil IPCA inflation registered at 0.26%, below expectations, 0.37% in July.
Pi Network price forecast. Downside risk escalates in PI as breakout rally cools off. Crypto today. Bitcoin, Ethereum, XRP trade broadly steady ahead of US CPI data.
Ethereum analysis and price prediction today with Trade Compass at investinglive.com.
US CPI data expected to show inflation pickup, posing threat to bets of multiple Fed rate cuts.
Monero declines sharply on concerns about possible manipulation from cubic mining.
Yeah, huge day with the CPI. If it comes out hotter than expected, Fed cut probabilities are going to adjust. Best case scenario here is there's less inflation. But the worst case scenario is not only is it 0.3, but it's more like 0.4, which pushes headline CPI to 3.1. Oh my goodness. And we got to reprice. So why don't we do a poll and see what you think? Let me pop a poll here. CPI will be higher than expected, as expected, lower than expected. Yeah, what's your guess? Sky Killer says, how is it possible that the UK payrolls are negative? Yes, so they're losing jobs. Unemployment rate going up? Yes. Wage growth going down? Correct. All of which is what is needed. But their inflation is still high. Yeah. Well, tariffs would be one. And people are still spending money. Yeah, it'll kick in. Most likely it'll slow down. We're seeing a slowdown in Australia, New Zealand, in inflation pressures, aka wages. $11 minutes still CPI. Yeah, food and rent are sticky. Well, no, food's not sticky, but rent is sticky. So that's probably another thing. By rent, I'm also including owner equivalent rent. So housing prices and rents. Almost all their negative drag on inflation was low energy. Correct. 100% agree with that. Correct. Yeah, and we've seen that across the board as well. Australia, New Zealand, Canada, Europe, UK, inflation rates have been reasonable. In some cases, headline is even good. But then you notice that 90% of the good is just oil prices down, which I believe is a Trump policy, not the policies of those other governments previously mentioned, therefore to with. Well, Sky Killer, it's not just food, it's real assets. So food and real estate. Food and shelter. Typically what you do is you move from financial assets into real assets. European Union awaits U.S. follow-up on trade deal promises. OPEC forecasts global oil demand to reach 107.7 million BPD by Q4 2026.
German ZW economic confidence deteriorates on trade deal.
Bay Street likely to open flat or slightly higher. Bay Street is Canada, by the way. Have you guys signed up for the watch parties? Is that over here? Oh, I know. Right on, Sky Killer. Yeah, so we're doing a great, a new series where we're going to review the entire monetary policy course or central banking course. We're going to watch them together live as a group, and I'll answer your questions that maybe you had from the first time. But this is a refresher course. You might have done the course 5 or 6 years ago. I need you to redo the course. I know you don't want to, but you need to. So we're going to do it together. Okay? And then I am going to teach you the new monetary policy framework used by the Fed. Yeah, and it's a pay what you want situation. Okay. But you need to know this stuff. That's the problem. If you want more details, it's investorbootcamp.com/watch party. And that'll give you details. I think there's also a link in the description below the video, in the not the comment area. Yeah, I guess the comment area, the info area, details area. But yeah, so we're going to take something that's a bit of a chore. I mean, it's going to be 15 hours of central banking lectures. Oh my goodness. But you'll learn about the history. Like in the third or fourth hour, you'll learn how to manage the balance sheet of a commercial bank. Because if you don't know how to do that, how could you understand how a central bank works? So I have to teach you about banking, right? Yeah, and then we got to go through the history, and you should understand in great detail the structure, not just the history of the Fed and how we made our third iteration of a central bank, but how it's all run and managed and all that kind of stuff, and the impact of money supply and how that changes interest rates, and you need to understand all those tools, because those tools are the same tools or similar tools that all the other central banks around the world use. So if you're going to be a Forex trader, you have to understand central banking. You just have to. Central banks change the value of their currencies. That's what they do. So you have to understand why they do it and how they do it and all that kind of stuff. But something changed recently, and the Fed uses a second framework that they've never used before. Yeah. So, yeah. You need to know. And that's what this is about. So this is a fun way to make sure you get it done. Refresh, sharpen your saw, and then be ready to get the new lecture. And you can't go into the new lecture being kind of vague on existing monetary policy frameworks because it's complicated. So, yeah. So imagine, hey, 13 weeks from now, you'll be an expert in the new policy. The textbooks are being rewritten. That is not a joke. That is not an exaggeration. The textbooks are being rewritten. And I'm pretty sure you're not doing university economics, so you don't even have a textbook. I am your textbook. Yeah. So let's zip over and get ready. I'm going to kill the music in the background. It's slightly distracting. 2 minutes, everybody, 2 minutes. Now, the biggest thing I want to watch are the stock markets. And you should be able to correlate that over. I guess we'll do this. This is gold, oil, S&P 500, and Bitcoin. Okay, that's good. We'll do that. Let's get all of these so we can pay attention to direction. Let's zoomy, zoom, and a boom, boom into the uno. Now let's do cinco. Are you impressed with my Spanish? You should be. That means 5. Yeah. So we're going to watch the 5-er. Cool, man. Cool beans. Okay, so if our headline jumps to 3, holy smokes. So higher than expected, we'll probably price out. Please answer the poll, by the way. We'll price out cuts. If it's lower than expected, oh my goodness, it's going to be such a relief. Such a relief. So low, risk on. High, risk off. Did you vote? Please answer the poll. 59 seconds, y'all. By the way, this Squawk Box is real time. So if there's a slight delay, it's just the YouTube stream. And I'm streaming it as fast as YouTube is capable of. But yeah, you might want to be inside of TRADARS because this calendar is real time. These headlines are real time. So we'll likely get a slew of updates 2 minutes, one or 2 minutes after the news that'll go through CPI subcomponents and all that kind of stuff. And that way we never have to take our eyes off the chart. Like we're doing now, we're staring at the squawk. You don't need to do that. All right, 6 seconds. 5, 4, 3, 2, 1. Here it comes. Is it going to be greater than 0.3? That'll be great, great. Are we going to get 3.1 or 3.0? 2.7, it's good. It's good, but high on the core. High on the core. Oh, my goodness. No, that's not bad. Oh, yeah, dollar week. Oh, it's so good. Yeah, my goodness. It's risk on, baby. Let's risk on. Ooh la la. Great. It's great. Nice. That is good, man. That's risk on. Dollar week. Yep. Maybe a recovery. Were you watching Brent? Brent was at support. Probably support holding. This is so good. Fed cut, man. Noise. Yeah, that keeps the Fed cut in play. Okay. Now, again, if you're not sure what's going on, I already covered this an hour and a half ago inside of TRADARS. We already discussed all of this. Yeah. So you should be on the clue train. Is it core hit 3.1? No. But it's not core, really. So headline is 2.7. It went down, not up. That's the big one. 0.3. But yeah, you're right. Headline core year over year, 3.1. So we'll see. Maybe people will freak out now and take it back around. Yeah. Maybe this shows, hey, the only reason headline is low is oil prices are low. So look, you got to trade what you want to do. If someone's going to think the other way, maybe. Yeah. Yeah. So if you're United States Consumer Price Index NOSA, MOM, registered at 323.048, below expectations, 323.17 in July. Breaking, US CPI inflation holds steady at 2 points in July versus 2.8% expected.
United States Consumer Price Index year over year came in at 2.7%, below expectations, 2.8% in July. United States Consumer Price Index ex food and energy year over year registered at 3.1% above expectations, 3% in July. Canada Building Permits, MOM, below expectations, 4.3% in June. Actual, 9%. United States Consumer Price Index NESA, MOM, registered at 323.05, below expectations, 323.17 in July.
UBS lifts lithium price forecast as down cycle ends. Here's our sweet spot. That's a high volatility event-driven strategy. It's not a prediction. It's a high volatility event-driven strategy. That's all. Oh, man. That's all. Very interesting. Okay. I think that core, though, does get That does get tricky. That core makes it tricky. So I could see someone reading this and taking it around the other way. What you need to watch is what's happening in the money markets and the which is a public market, and you need to watch what's going on in Fed funds futures markets. And I'm building a tool to watch the public markets, and it's not quite the way I want. So it's still a work in progress. And what we're trying to do is look at um, using yields to calculate what's being priced in for the near future at central banks. And so we want to know, is Australia likely to raise interest rates or cut interest rates? Is Canada likely to raise interest rates? What about Japan? What about the United States? What about UK? So all these major economies around the world, we're going to do bond math and then calculate what is being priced in for the future interest rate. Meaning, I'd like to see a gauge, like a visual gauge, that shows high probability of a Fed cut or high probability of a Fed increase or somewhere in between. Okay. I don't want, Sky Killer, this is as close to that as we'll probably get. Okay. So anyway, so what is working is we are pulling in yields. So we are pulling in yields, not as often as I want. I want to pull it in every 15 minutes. It looks like we're not doing that fast yet. I want to pull in yields, and then we do our calculations and then make it very easy to read. Right? So like this math is just not correct. And I think some of the variables are off. So I have to work with the team, right? Because they're like, oh, the United Kingdom's going to raise interest rates. Japan's going to cut. No, they're not. They're not. So, yeah, but we're getting there, and we'll make this a lot prettier and all that. The thing is to get to the data to work, and then I'm going to add this tool so that we can very quickly just always see, right? Just very quickly always see using public data, which is millions of trade dollars, billions of dollars treasuries, and using the math to predict what the market thinks the central bank is going to do next. Isn't that cool? And I have a way in my mind to do it through sentiment analysis, not just quantitative. So I think we're going to try to do that as well. But it gets complicated when you think of every central bank. And, I don't know if I can do sentiment for everybody, but I can definitely do it. Yeah. So anyways, we hit the we hit the pivot, so you got to be careful there. United States Consumer Price Index Core SA up to 328.98 in July from previous 327.6.
Breaking. U.S. CPI
These are all the
inflation stays
pullback.
unchanged at 2.7% in July versus 2.8% expected.
U.S. CPI comes as expected. Market reactions. Okay, it's in play, and this is interesting. Oil's still coming down. Very, very interesting. Gold, if you were going to try it, it's messy anyways. But notice how we're kicking off of the pivots. You know, same analysis, high volatility, event-driven strategy, pretty standard stuff. Let's look a little further out. And yeah, you can see not only is it support, but it's a counter trend set up on gold. If you were going to be a bull, it's not the worst place in the world to start looking for bullish. Okay. I'm worried about the false rally, of course. Now, if you say to me, well, what are you talking about, false rally? You have a gaping hole in your fundamental analysis about gold. You should already assume we're going to have a false high. Yeah. Lovely. Get going to the next level here. Lovely. Yeah. Isn't that beautiful? Question is, what do I do now? I got things to buy. Yeah, I got things to buy. Check all my things. Check all my things. Well, the thing is, Don, are they going to use core or are they going to use headline? Okay. So you can, if you, and then also, how do you measure the assumptions? So that's what that new tool is. Where'd it go? The new tool. Did I close? Got too many windows open. Did I close? No, it's this one. Okay, that's what this is doing. We want to use public market data. And again, all of this is wrong, so don't get all critical. This is the roughest of rough. What we're doing is we're pulling in the data first, but the developers clearly misunderstood the instructions and the mathematics because it's not doing the math properly. So I'll fix that. Don't worry. But this is using public markets to tell you what millions of investments that are happening right now tell you about what the market thinks the Fed's going to do next. So imagine like we just had this, is the market using headline CPI or core CPI? We would be able to figure it out. We derive that, not figure it out. We could derive the answer to that question mathematically. But that's for public market. We also have private market data. Okay. Much smaller sample size, but this is bank to bank loans. And okay, 90% chance they're going to cut now. Yesterday, it was 85, almost 86. A month ago, it was only 57. So last week, we were certain it was 93. Then it dropped all the way to 86. And now it's 90% chance.
United
again.
States Consumer Price Index Core SAA up to 328.66 in July from previous 327.6. United States Consumer Price Index Core SA up to 328.98 in July from previous 327.6.
Breaking. U.S. CPI inflation stays unchanged at 2.7% in July versus 2.8% expected.
U.S. CPI comes as expected. Market reactions. United States Consumer Price Index NOSA, MOM, registered at 323.048, below expectations, 323.17 in July. Breaking. U.S. CPI inflation holds steady at 2.0 in July versus 2.8% expected.
United States Consumer Price Index year over year came in at 2.7%, below expectations, 2.8% in July. United States Consumer Price Index ex food and energy year over year registered at 3.1% above expectations, 3% in July. Canada Building Permits, MOM, below expectations, 4.3% in June. Actual, 9%. United States Consumer Price Index NESA, MOM, registered at 323.05, below expectations, 323.17 in July.
All right. So on the 45 and on the 15 of every hour, you get an update. So that's why there were so many headlines there. So just giving you an update of what's happened in the last 30 minutes. That's all. So it's usually not that. All right. So what does this tell us? Well, we have prices. We have an average price. And the price, when banks are negotiating with each other, one of the variables to calculate the proper price is what the interest rate is going to be. And so when you look at the price, and in particular the change in price, they're pricing in a Fed cut. So, what question does this answer? Is the market, in this case professionals, bankers, it's a small constituency, but it's bank-to-bank loans, and they are using, based on what happened yesterday, the difference between yesterday, and this is basically this morning's probability, and where we are now, they're using the headline number coming in not red hot. So because that's the only thing that makes sense. So what I'm trying to do is say, okay, this is good, but this is only a few dozen negotiations. What I'm building here for us at TRADARS is millions of negotiations happening in real time. Okay? And so I'd like to have both, so we can compare these two things. So I've paid to get access to this data, and they're dragging their feet. We've been waiting 2 weeks. I've paid for it, and they still haven't given us the access. But it'd be nice to have these so we could have private and public market data on the probabilities of changes in central banking policy. Yeah. Cool. Okay. So, Don, it's not why would the Fed cut into rising core CPI? The question is, what do people think the Fed will do? And I don't know what they think, but I know what they're doing. And so it's what the market thinks the Fed's going to do, and they're front running. And we want to know what they're doing. Okay? It's not what's right or what's wrong. You might say that doesn't make any sense. Doesn't matter. Doesn't have to make any sense. It's what they're doing that matters. And we want to go along for the ride. So it's going to make today an interesting day. By the way, there's that Bitcoin rally. This is all just the high volatility event driven strategy we've been doing forever. Look at this. So awesome. So awesome. This, though, WTI, oh my, that's not what I thought would happen. Let's go to the high volatility event driven strategy here. And once again, worked out. I'm on a 15. Okay, look at this. 618.
U.S. consumer prices
50%,
increase in line with
382.
estimates in July.
My goodness.
Futures point to slightly positive. Open for Wall Street.
Cool. So good. So good. Yeah, so I'm going to have a busy morning in the stock market. Look at that. Now, I was hoping for down so I could buy it, but that changes things. Holy smokes. Look at this. Look at that. Oh, my God. Which is great. I own it, but I want to own more. Yeah. Yeah, this gets really interesting. Yeah, gets really interesting. Makes this year, I mean, this year makes sense. So now we're pricing in a Fed cut, and taxes have been cut, and tariff uncertainty is diminished. Yeah. All of that says third week of August. Yeah. And that's what today was all about. Now, that was uncertain. So, as far as my endowment funds rolling into this week, still focused on conservatism, being not crazy Republican. What I mean is being conservative, being concerned about reasonable probability of downside risk. That's all that matters. So I went in there with that focus in mind, even though this year had a much higher chance of up than usual. Doesn't matter. Going up is why I own it. But the the risk of it coming down for a while is my job. So I have a lot of cash. How's that 10-year T-note doing? That's got to be interesting too, huh? Let me check. Let me get into TRADARS. Let's see how it's going. That's interesting. That's not likely to last, I would assume. Big changes here, huh? Interesting. Interesting. Ooh la la, as they say. Who says that? I found that market open email I couldn't find earlier. I got to update it. It's going to my Harvard. So this is all pre-news, though. It came out 7:14 in the morning. Yeah, down to 118 and then maybe back up, huh? 117.942. Then up. It came down, basically test 118 and then take it north. Well, we're at 119. There's a place where you can get the high and low of the day, and Bitcoin's low of the day is 118,250. This had it coming down to 117,942. So we're about $350 off. That's not bad. Because it's been up since then. Down to 118, up to 119. Okay, cool. So we're not quite in the open market. So a lot of things are going to change when we get to the 930 level. Okay, Nikkei just crushing it today. How's the stock market? Dow and DAX and
United States
S&P
Red Book
500
Index, year over year,
should
dipped
be
from
up.
previous 6.5% to 5.7% in August 8th. Fed's Bullard would be happy to proceed regarding the Fed chair role.
Breaking. U.S. CPI inflation stays unchanged at 2.7% in July versus 2.8% forecast.
Germany current account Nenze up to 18.6B in June from previous 9.6B.
A farm babe fights for GMOs and Big Ag, pushing back on Maha influencers.
All that news just came out in the last minute. Amazing, huh? So I would expect Russell, even though we have a negative score, it should benefit from because of its duration, which is the sensitivity to interest rate changes. So if we're rolling into the 90% chance the Fed's going to cut zone, then Russell should benefit more than NASDAQ. Russell should benefit more than S&P 500. Russell should benefit more than the Dow. That's the thought. Yeah. And I do have buy orders in place for Russell. But I don't think it's going to dip. I think it's going to rip. Okay. Yeah, we're rolling over to the positive here. Looking at long-term treasury yields, volatility, the dollar, short-term treasury yields, the yen, the stock market, gold, and the options market starting to turn risk on. Whoa, whoa, whoa. Cool, man. Cool beans. So I wonder if we're going to get a bunch of score flips. Yeah, going to get a bunch of score flips. Oh, we just got an alert 2 minutes ago. Sorry, I was busy. How do I pop this? I guess I got to pop it this way. This just came out 2 minutes. This one, 2 minutes ago. Euro CAD. Okay, so the following assumptions have been made: at least a 20 pip forecast, and then we need multiple things that say the same thing but for different reasons. For Euro CAD, there's a triangle break and a resistance break. Yeah, 20, 21 pip forecast, so just barely a little scalp, and 68.7% chance of up. So basically 160 and a half. But I'd go to 161 if I were me. But let's take a look at that Euro CAD. Euro. It's not something I'd normally watch, but this is why you have a machine watch. Huh? I don't even have it up here. Euro dollar. Euro Aussie. Okay. Well, let's switch this one up. Euro CAD. Huh? Trades Euro CAD. Europeans, I guess. Euro CAD. All right, let's take a look and see what it sees. Oh, what? Oh my God. Yeah. So definitely a pivot play, huh? Oh my goodness. So Euro CAD, it noticed. So what it did is it said this high is higher than this high. Okay. So if you were going to be a bull, then you are in a buy a dip scenario. But we just achieved our day trade. We got to 106.60 and it's saying 106.70. Oh, well, that's basically our aggressive zone. So it'll be interesting to see if this comes through, and we'll call it 20 minutes. We'll see if there's going to be a follow through on that. Okay. Keep your eye on this pivot, although it's an annual pivot. Let's go shorter term. Template. Let's do day trading bullish bias.
Ripple price forecast. What's next for XRP as SEC shifts focus from courtroom to policy?
U.S. stocks may see initial strength following inflation data.
I'm going to do it this way off the news spike. There's the zone. Let me go way out to a 15-minute chart. Yeah. So it's saying 106.70, which is so that means probably right there. If I'm going to reverse engineer, the 50% should get us to the 50%. The one in the middle gets us to the one in the middle. If I'm going to do price action instead of Fibonacci, I'm going to use this as the role reversal. And then a typical day trade, well, that's already set. And that says 80, not 70. Let me adjust because we only have the aggressive target. So I go to my indicators, I go to my biased pivots, I see midpoints are turned off. I'm going to turn that on. That gives us our conservative target. Okay, so our conservative target is here. This is a day trade. Okay, This gets us to this, but that's not what's in play. This gets us to that, and that's what isn't. So this might get us to that ball, and really we'd want to adjust the ears. That means there's going to be we reverse engineer it. Yeah, there's a bigger. There you go. Oh, yeah, baby, yeah. Okay. Now, this actually started 4 hours ago. TRADARS sent out an email to the mobile service, and it was down here quite a few pips below where we are now. So it kind of, I mean, it agrees with everything we just did. How about that? Except you got the heads up 4 hours ago, not 4 minutes ago. So what? So one plan was 4 minutes ago, the other one was 4 hours ago, but they're the same. But all it's doing is looking for confluence. So this is 4 hours ago. You see this? 4 hours ago? 4:44 a.m. It looked for a confluence of patterns that agreed. So up to resistance, break of consolidation. Cool. Followed up 7 minutes ago with, okay, we got to those levels, but then we consolidated. So now maybe break to the next level as high as 161, which I would agree with if we do that. 161 is actually quite a bit higher. But that, this is today's target, so maybe even tomorrow's target. So maybe this turns into a day trade. So tomorrow's target is 160.91. And that's about right, according to this, between 73 and 161.20. So in the middle of that, not too bad. So the way I would kind of interpret this, if we get this right, go for tomorrow's target. Okay. Now, if this somewhere around here, so we're at the 50%. If, let's say it comes down to the 618 and then starts working its way up and closes high, this is going to pull up and it's going to change our target, and it'll probably move just above 161. And that's what this says here, just slightly above. So you can see 160.98. Well, it's 161.18, so less than that. So 161.15. Yeah, somewhere like that. So all of that coming together implies down, stabilize, close the day higher, pull the daily pivot up, which pulls the target up, which then fulfills what you were alerted to 4 hours ago. Oh, so that's part of our mobile service. That's just one small part of our mobile service. I think what I'm looking forward to in the mobile service today is the changes in score. The score flips, I'm very, 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 very interested in. So, what's a score flip? When you look at this, does the CPI data change any of this? Does something become more bearish? Does something become more bullish? And it's quantitative. It's quantitative. It's very little of it is actually technical analysis. Yeah. So that's kind of interesting. So instead of tracking that, what we do, and like, let me give you an example here. Let's go to a Forex pair. Okay, euro dollar. The currency pair euro dollar has a score of 7, indicating the base currency is stronger than the quote currency. Okay, the pair's overall score changed by 0 today. So what we're doing is we're watching these scores change. It was 6 yesterday, it's 6 today. But if the new information changes stuff, okay? See, look at this, 2.7 versus 2.7. Aha! Ha ha! Ha ha! We've already updated. So, if that positive data shifts euro dollar to be more bullish, and it becomes a 7 or an 8, guess what? I get email. People in the mobile service get email. Yeah. Yeah. Not bad for less than $1 a day, huh? What is it, 80 cents a day? I think it's killer. So, well, I got to go because the market's going to open, and I have a bunch of things I need to do. I have some orders in already, but I need to adjust or add to my orders. Busy day. CPI was the thing we needed. Look at this. It looks like another high volatility event-driven strategy worked. I think we're, 4 for 4? Cool. Peace on earth. May the pips be with you. May your profit